What's up, everybody? All right, what's up? What's up? Good morning. Market's opening pretty solid, stable. No issues here. Let's take a look today, Monday. Earnings today. Some big earnings this week. I think we have Nvidia tomorrow. Yeah, we do. Good morning, good morning, good morning. Don't forget, friends, smack that like button. Please subscribe to the stream if you haven't before. Let's get ready to get rolling. What do we got here? Oh wait, hold up.
$1 billion, $13 billion investment.
All right.
AI launching program to train millions of workers in artificial intelligence called AI Ready. So I guess if you guys want to learn.
Let's get some gaps have been filled. Let's clean that up here. Making everything stabilized on the side. Good 3 minutes till market opens. How are you guys doing today? Are the rounded corners the Windows 11 thing? Yeah, they're a Windows 11 thing. You nailed it. You nailed it. It's that wintertime feeling. You guys can feel it, right? It's starting to get chilly where you live, probably. Come downstairs, come to work. You can just feel it's a little chilly in here than normal. See, Friday didn't really do much. Market just kind of went up, went down. Friday expiration was pretty much it. We're running a 2 new expiration this month, so we're going to see what we get. Obviously, monthly hedge pressure, we're going to see where that opens up. Likely below where price is trading now. Morning, fellow warriors. What's up? Any DD bands overnight? No, we're good. Check it out. You're good. Good morning. What's up, everyone? Analysis, NVIDIA price. Yeah, let's talk about that once we get all the data come through. We'll look at NVIDIA, as you know. All right. I'm doing okay, Jay. Thanks for asking. 65 in Florida? Oh, nice. Canada flirting right below 32. Oh, nice. We're getting like the 70s, 60s over here. Let's see a guy here. Okay, market opening. Resilience pretty nice and stable. Steady. The market's been trading higher and higher and higher every week. Do we have any yellow lines in the vicinity? We actually don't. 45.77 is pretty far out. Let's see what we got here. All right, mean reversion, hedge pressure tap, right on the edge here. Let's see, so we got, oh, here we go, my tablet finally up. Hold on, where's my pen? Let's see their talk. Let's go. Shit. Mean reversion again, so this is like almost a no trade day, a second time in a row. It was supposed to be a no trade day the other day, and I took the, let's have some fun here. Oh. All right, I need to go through and actually change this. All right, look at this beautiful handwriting. Oh my goodness. Don't even ask. My computer literally goes blue screen of death in the middle of nothing. All right, back to what I was saying. Mean reverting, no trade today. Not really sure what's going on. It has been almost since the summer that my build has gone unstable, and I've done nothing like different. I removed my overclock. I did everything, reformatted. Who knows? Okay, so that's all I do right here. That's it. Either Windows 11 got a bad build, my components, or I've got some component that's failing, and I just need to figure out what it is. Like I have like a fucking supercomputer over here, so it should be able to handle everything I run. So it's probably just a bad component. Okay, so this is DD roll right here, right from the middle of mean reversion to the bull zone is DD, and then I would be done here. This trading up in here, it's random. It's random. So we don't really have any guidance on anything going on right now. Double check, make sure VIX has nothing in the way. Hold on. So it's a sit-out day today, really, for S&P. So this is going to be not really much to look at on today's setup. DD not loading on your end? It should be good. If it's not loading, make sure you're disconnected. Go to your connections. Make sure that you've connected. Make sure that this is green up here, that you're connected to the platform. Make sure your status, you can see what all your things are connected here. 45.24 SPY yellow line. Let me put this here. So there's no trade setup today. Obviously, it really kind of sucks. It's kind of gonna watch this one and kind of sit out today. That's... Microsoft just hit a, or sorry, Meta just hit a 52 weeks high, 338. Interesting. Give it a little time to like stabilize here. All right. Let's see. Trying to make this an appropriate yellow color there. That's good. Save my chart. All right, guys. Welcome to the stream. Smack that like button, everybody. Make sure you give us some love. The YouTube algorithm loves you. The more you do that. You want a short DAX day? You're excited even loading? Yeah, we're noticing that our data feeds didn't come through today, so we're looking into it right now. Give it a second. So right here, there's nothing to trade. So this is a sit out day, and everybody's like wondering what I'm going to do. Nothing really to do. The resilience is bullish. Yep, really nothing to do here. Market's pressing bull side here. It is random when you go in the bull zone from mean reversion. So I don't do any kind of trading from here. This is kind of one of those hard to fathom, hard to figure out days. QQQ is a bull long up. Clearly, it's a long to DD band. We can look at that really quick if there is one. It just doesn't have like a good setup to bounce off of or anything really to take from. So. Let's look at Q's. Let me show you what it looks like. And I don't short it either. So Q's a DD band right now. If one were to want to see some kind of action to the downside, that is a place to short from. But I don't particularly take trade like that. It's a sit out day if you come back to hedge pressure. Yeah. Well, I mean, once you hit the well, I mean, the way I trade, the first support, first resistance rule, essentially I don't try to play second or third attempts. The reason we say it's random is because the market opens mean reversion. And as soon as you connect with kind of what it's not supposed to be bullish, right? So it's supposed to be balanced. And all of a sudden we're getting a nice little short squeeze and pushing into bull territory. Whenever you break from one territory to the next, it's always random. So an example is if you're trading up in bear zone and then you hit here and then you go up inside of here, it's random from here. I don't try to fade it. I don't try to rally it. I end my trade usually at the edge here. If I hold a runner and DD's bullish, I'll end my trade here and call it a day. So anytime you are mean reversion and you break down in here or break up in here, I trade to the edge and then I don't trade beyond it because it is kind of like coin flippy and random. Second thing is connecting with DD bands on NASDAQ, so clearly there could be some randomness to that too. So looks like our data's coming through, everybody, so we should be good. I don't know what the stall was this morning, so here we go. Let's see where monthly hedge pressure is on S&P. So way down here, 425. So way off the chart, so we're good. But so particularly today, this is a day where you just don't get anything actionable. You could have longed from here to here out the door if you wanted to. And of course I miss it and I don't do anything else. And from here, it's going to be particularly hard to guess because you're hitting DD band. This could break out and go crazy. This can, break out and sell off. This could reject and sell off for the whole day. Once you connect, especially with DD band as well, market is random as well. Okay, so let me try real quick on this space. What's going on? Go. So from here, it's smart because you don't have anything to go by. So give me 1 second. So Nasdaq, let's hit that 16,000 level.
No, I just played the equity actually.
Sorry about that. All right. So, so anytime you break from mean reversion to bull zone, right? It's a coin flip at this point. Like you have a 50% chance the way we look at it. It can go up to there. You have a 50% chance it closes back in mean reversion where it started. So the idea is that normally under ideal conditions, right? Ideal conditions, opening mean reversion, you tend to close in mean reversion more often than you don't. When it breaks out, one can always try to trade that thought process to say more often than not it ends up down in here. But whenever you have any irrational signals, you know, especially irrational signals, we consider it a coin flip. And anytime you break up inside of here, it is pretty much random. So normally, I don't short it back into here. I would just, if I were long, I would take profits on my long on the way up, knowing that at some point it's likely to return to where it started by the end of the day. So what I don't ever do, which is, this is not trading advice to you guys, but what I don't ever do is I don't ever try to fade a bull breakout to close a mean reversion, because if it does go, it's violent and you can blow up. So if I'm not sure it's going to go up, which I'm not, I certainly don't take the bet that it's going to go down. Even though if you were to like put a gun in my head, which way is it going to go? More often than not, I would point to there. I just don't trade it. Because if I'm wrong, it's not just I'm gently wrong. I'm wrong by what, 20 points. It's big. So I don't want to play it. Does that make sense? Drew Hawks, we have a video in the Discord that talks about how to get multi-window. You guys need to go to the Discord and watch the training videos. How to get multiple windows. So it's not built off a trading view, so that's where it gets confusing. We do ours different. All that's trading view inside of here is this right here that I'm circling, just the chart. That's it. So the way we do windows is this thing right here. Click this little open chart button right here, and it'll pop out a new window. That should help you. John Martino, the symbol for Nasdaq futures is here, right here. If you go into your risk interval and DD tab, it'll tell you the ticker symbols, the way that our platform calls them. And remember, this is also a holiday week, so, you know, probably not going to get a lot of activity like you normally would. So f.us.enqz23 right here. When you pull up the NQ futures, it doesn't seem to be the same. When you look it up in trading view, I don't understand. We're not trading view. Why are you comparing us to trading view? I'm very confused. They do something different than we do, apparently. What's up, Cheyenne? Go here, click here, and then it pops up. And there's your ticker. That's it. DD band tap on Nasdaq. The difference between us and TradingView is we have a real futures data feed. They might have a delayed feed. They might have something else. You usually have to go buy data feeds. So if you're not buying the data, you might get delayed data or something different. This is the real CME data feed. This is 100% of the flow and everything is. This is more accurate than TradingView. If that's the case, you might be on delayed data. Because futures, you typically have to buy the data to come through. So if you don't see it, then you're just TradingView is delayed. NVIDIA, yeah, let's do it. I don't know, John. Looks like something's going on with NVIDIA today. Strong and bullish, man. Super strong and bullish. Bear side weakening, bull side weakening. So you can see that on the monthly maps, right? So you can look at the bottom of the bull zone sloping down. Top of the bear zone sloping down. So you have longs accumulating and shorts squeezing is the current thing that you're dealing with in NVIDIA, right? And NVIDIA is breaking to all-time highs for earnings. So this is just that double bull power that we've been, monthly maps are showing is still there today. So you see up here, when I say it's random, 50% random, you don't know what it's going to do in this particular setup. Did I answer your question, John Marino? You're also watching a YouTube stream. It will be delayed here compared to what you see in your platform. You can put the platform side by side. There's probably a 30-second delay between this and our data feeds will be better than what you see on TradingView. So they're probably not giving you all the data, or they're probably delayed. This is the entire CME feed, top of book. So, and this is real time. So as you see, real time. You're just surprised TradingView is so different because, well, no, don't be surprised. You need to go pay for it. That's the whole thing. You're probably not buying the right data feed, or you're probably in the delayed data feed. Yeah, I'm not sure what's going on with NVIDIA today. We had our servers hiccup. We're still looking into it. What are you typing in TradingView? I'm just curious. So maybe I can help you troubleshoot your problem. Are you looking at the actual contract itself, or are you looking at the continuous contract? There should be a new COT. Let's see if they in Q1. Yeah, like that's... Oh, my monitor's going crazy right now. Hold on. I'm still on a hunt to figure out what is going on with my computer. Something on my computer is acting funny. I could have bad RAM, I could have bad video card, something's going bad. I think that's why my computer get all funky. Current price is, can you look at the timestamp? Wait, on NQ, current price is 15,954. It's probably because you're on a 15-minute delayed data feed, John. If you rewind 15 minutes, that's really what the price was 15 minutes ago. They probably aren't. And also, you have to be careful because this is... Let me teach you something about futures, right? This is the Z23 contract. You're using something called a composite or the continuous contract. It's not really, that's not really, it's something that they daisy chain a bunch of contracts together and put the front months. They could probably still be showing another contract. You have to be careful too. If it's currently this timestamp. There's such a lack. No, John, I'm just saying is like, forget what you're doing. What you're doing is wrong. That's all I'm saying. Learn what that contract is and learn what it's showing you and learn the difference between the different futures contracts. Like what you're looking at TradingView is not the correct price for NASDAQ's current contract. If it's showing 50 points away, then what you're doing is incorrect. So you have to figure out what it is you're doing that's not right. Either A, that NQ1 or exclamation point, I don't know what that is. I'm assuming that that's the front month continuous contract. And it could still, it's either A, delayed, you're in a delayed data feed because you didn't buy real-time data, or B, it's not showing the Z23 contract when it should be. So this is Z23 current price real time. This is the December. You have to make sure, like, if you go into TradingView and actually look at the Z23 contract, not just NQ exclamation point or whatever you typed, and see what that actually is, it should be, yeah. That's right, the answer is TradingView is delayed. Like, if you don't know that, you have to go out, see if you have the data feed or not. But the easiest way is to put your mouse under the price, and clearly, if your price is, the last update was 15 minutes ago, then you're delayed. How can you update your TradingView? I don't know. You probably go to TradingView and ask them. That's okay. I don't know why. We have lower volume, shorter week. Yeah, that's what I thought too. Kind of like a lower, it's kind of a lighter trading week. Nothing too exciting here going on today. We officially have 50 vendors ready for our vendor marketplace. I'm excited. We're making that, and I'll just tell you, just give you a little bit of hint. We're gonna be slowly releasing like test vendors, just to kind of get the technology out there. Probably in about 2 weeks or 3 weeks, we'll have some test vendors on. They're not test vendors, but like testing the marketplace functionality and the ability for you to already jump in on some stuff there. It's happening so quick. Yeah, the easiest way to get free real-time data is just to open a Thinkorswim account or Schwab. I know you have to have an account minimum, but you get the free futures data there and don't make any trades. Yep. With us, it's $10 a month API fee, $1 a month for CME Exchange, so you get $11 a month total. Is there any reason to have level 2 data? No, never. That's like an archaic thing. You would never use level 2 data unless you're writing code that would utilize level 2 data for some kind of calculation or correlation. As a day trader or swing trader or any kind of trader, you will never use level 2 data. And if somebody tries to get you to use level 2 data while they're teaching you, call them an idiot. because there's no usefulness to the level 2 data. There's so much computational, you know, power you need to just make some kind of sense of what you see. The bid and ask are constantly changing, and the levels, you know, the tiers are constantly changing. There's just millions of people doing millions of things with no rhyme or reason. There's no correlation or anything, just because there's, you know, like, so essentially level 2 had some sense back in the day when markets weren't necessarily computerized, and you can see people's actual quotes, right? Like this is, you know, somebody wants to buy 1,000 here and 2,000 here, and it made a lot of sense at that point. Now it's just a flickering mess of numbers and noise, and has no rhyme or reason, and probably 99% of it's just fugazi anyways, spoofing and market makers, and it really doesn't represent anything tangible that you can utilize in any kind of real calculation. Just years of trying to stare at it, just realized it's just noise. Great question though. Most bid and ask aren't even showed on level 2. You have to trade based on price action. Use level 2 data. Most of the time it's a scam. You're on the wrong side of the trade. That's the whole thing. It's like there's, you know, yeah. Ever since you have computerized market making now and all that order flow routing stuff, so for Livewire, for our stuff, level 2 data is just gonna, like, I have it, but that's just to show it on the platform. Don't go buy what I have. Like this, don't do it. You don't need it. Level 1 data is the candles and historic data. That's all you need for our stuff, at least. I watched some penny stock person a long time ago on YouTube talk about, I say I don't watch them, like I watched them. I saw it one time, and they had like level 2 and all. It was like this flickering, I don't know what platform they used, but it was like this colorful flickering mess of numbers, and it was like yellows and greens, and the level 2 was just like a fucking hummingbird just like flickering around. And they were trying to like talk about it while they were trading, and I was like, I got the weirdest feeling. I'm like, I know these guys are pumping penny stocks, and they're gonna buy the stock, and the 40,000 people watching the stream are gonna buy it after them and pump it up. You guys all know who I'm talking about without saying their name. And I'm like, oh, this person's pumping penny stock, and they're just making up random shit so people think there's some structures. Oh, well, the bid, well, looks like the level 2's thick, and the level, and just talking about level 2, like staring at just this flickering mass of numbers, and then trying to like justify what they're doing, just instead of saying, hi, I bought the stock, and 10,000 of you bought it after me, and I made money because I sold it first. Like trying to just use the level 2 and the confusingness of this to try to just send everybody on this like wild goose chase of trying to like learn how to trade like they learn. Here's how you trade like they trade. Go open up a trade room, start a YouTube channel, buy a stock first, and then tell 500,000 fucking people that you bought it, and then let them buy it after you, and then sell at the top. There you go. There's his strategy, right? So, but the fact that they were like, oh, it's like the level 2, it looks like it's good. Oh, there's a lot of action on the bid side. I'm just like, it's they're using that to tell you junk so that you think there's a strategy behind what they're doing, so you don't see what they're really doing. I was like, there's no way these people are, well, because people are, but they're talking about it in chat, and they're like, they're all talking about, they all went and bought the same platform to read the same noise, and just like, you're watching a scam in progress, right? That strategy will also land you in prison at some point, yeah. Strategy in quotes. And penny stocks of all things, right? I mean, there's no liquidity in those things. The level 2 is just a nonsense. Probably half the level 2 is the people in that trade room. You read a book by the head of some prop firm, says they learn to use level 2 to trade, but that's on a whole different level what you're trying to do. I still don't believe, just because they're a prop firm, I still don't believe you have the ability, your eyes can't process just like a linear wall of data that's just flickering like this. There's really nothing to say from it. Now, one can say that the level 2 is important when you're processing it computationally. It's different, right? You're coming up with some kind of correlation or something. You need algorithmic assistance at that point, for sure. But like just as a trader, like staring at this, there's no useful data. And whatever prop firm teaches people to do that, I would probably, I would ask what they're trading, and I would be very skeptical of somebody teaching a human being to like read this in real time. See a big bid on level 2. It's most likely because market makers want to short a stock. Same goes, so there's a big offer. They want people to sell. Yeah, and then you've got hundreds or thousands of traders and liquidity providers all quoting bid and ask for the same reason. Half of it could be spoofing, half of it could be real, half of it could be baiting. You just never know. Like, it could be some speculative bet. I mean, the fact that there's a million people doing a million things and it's changing in real time, it's like, that's why I just say it's useless. It's just noise. See, well, as Kevin says, he uses some kind of computational thing, as I agree. You need some kind of computational approach to utilize something in level 2, but the data is itself too much to process on your own. So what he says is it's not nonsense. Use an advanced view to filter the DOM, and there you go. Right? You filter it somehow, you can get yourself a little more information. Like I said, you can't use this as a human eyeball. Do YouTubers even trade? I think a handful of them do. Profitable prop firms aren't YouTube. Absolutely not. I don't know a lot of profitable traders on YouTube. I don't know a lot of profitable traders in life in general. It's a very rare thing. I mean, I know some, but I don't know a lot. The ones I know are really good, just like me. They talk about the market like you listen to them talk and you sit there and like want to light a campfire because they say stuff that's so different than what you've heard of before, and you're like, okay, this person knows something. I've had some powwows with some profitable folks that just have that brain, that next level thought. And it's like, okay, you're not the same as that screaming idiot on YouTube pushing out subscriptions to these trader funding programs or whatever. You're not, you are different leagues of human intelligence. Level 2 was an edge back in the 90s. I'm on the same boat as Peter. I'm exactly the same boat as Peter. It was an edge whenever it wasn't so active and wasn't so spoofy. Right, back before you had back when you used to have actual specialists running the stock from the floor. Level 2 would represent everybody's actual quotes and what they really wanted to buy and sell it. It was, and then people learned how to manipulate that, and slowly in the 2000s just became noise. So I'm curious what you do, Kevin. Like, what is your strategy that you use with level 2 data and futures? Like, how are 9s and 10s and 11s and all this giving you information while you trade? And what is it showing you? To see flips in the order book. So when you explain what a flip, what is a flip in the order book? Like a 100 bid flips to an ask at another price. Like you're looking for where things shift around. It's kind of cool. And the bid and ask are in quarter point increments. Yeah, that's also true. That the decimalization in 2003. When things stopped trading quarters of a point, made it even more granularity, and then it became even noisier. Yeah, those are the two things that kind of made it hard for humans to use it raw. Back when you can only short an uptick, the old uptick rule. Oh yeah. Good traders are quiet, that's why you don't have a YouTube channel, and oh yeah. Yeah, if I didn't have Rocket Scooter, I wouldn't be on YouTube. If I didn't have a platform. We're on YouTube to show off the platform. Other than that, I'd like to sit here in the quiet, in my underwear, no camera, no talking, none of you knuckleheads, and just do my trading and have fun with it. You don't do a basic price letter, Kevin, in your DOM. You can see reloading of the bid and ask. Oh yeah. So that's kind of cool. So as Kevin has demonstrated, like what I said earlier was that level 2 in its raw form is useless, right? because it's just too much data and it's just too much information for you to find anything useful. You have to have some kind of algorithmic computational approach to analyzing it. So you need a computerized assistance. And so what he does is he uses something which is actually useful. And that's that's the next level is like what I was saying was useless was staring at the level 2, like for useful information. Oh, there's 1,000, there's 100, there's maybe a resistance, maybe support. Like that's not really how it works. If you're looking for a certain type of thing where he's looking for places where the book flips, then that's the useful information. Like, oh, okay, we flipped here, flipped there. Maybe that means something. But even though you have to trust that that flip was not spoofing as well. And that's also the bigger problem, is that most of the information on the level 2, is it truthful? That's the next step. Are people actually placing those things there to actually absorb the market? A lot of times you'll see the bidder ask be padded because there's an over-the-counter transaction. And somebody just, hey, I'm going to buy this. I'll sell it to you here. Okay. And then somebody throws the thing on the ask and then they buy it up until it gets there. They make a deal. Like there's all kind of weird ways people maneuver in Wall Street these days. So, but yeah. So on the futures chart at some point? No, because there's no hedge pressure, MHP, or redistribution calculated in futures. We don't combine the two charts because of that reason. You can convert one to the other, but the problem is that when you convert it, it's not a static. It's not a static number, right? Because the ratio between the futures and the index track each other, but they're not one-to-one tracking. The ratio sometimes changes. So if I were to put like a hedge pressure on here, like it would dance around like every time a trade happens. Hedge pressure would be like a moving thing, right? It would just wiggle around all day because they don't tick up and down tick for tick. So any conversion would make this chart look wobbly and weird, and that's really hard to teach that. I mean, we had somebody this morning ask, how do I open another window? When the very first video on the platform teaches you how to open another window. Imagine if you guys can't watch a video on how to open windows, if I would have to teach you a video on why shit dances around in your chart, and now you know why we don't do it, because you don't want to watch the videos. So it would be very confusing for you to have indicators that dance around and not know how it works. So then we decided not to combine the charts, if that makes any sense. Because there'd be a learning curve and it would be harder to understand why that's happening. We have some clever ways to solve that problem, but it comes down to the science. We did some math here and we're like, well, this is how many people watch the actual videos. We can see that, by the way. And this is how far they get in the videos, and we're like, okay, we need to put the most information up front. And it just comes, the more you complicate stuff. You'd think it'd be easier to combine the two. It actually becomes a little bit harder for that learning curve. So at some point we would try to figure out a way to do that and then teach one master style. And the answer is yes, we will one day, but we haven't really figured out the best way to do it. Because if you take DD bands and move them over here, the DD bands like where my mouse is, you'd see them move around like this. Like if you convert DD band to SPY, they would just dance, right? But the other things would be still. It'd be a moving target. If you converted your liquidity map stuff over here, you'd have walls dance around. You'd have, redistribution zone dance around. It would just be like 1, 2, 3, 4, 5, 6. You'd see 6 lines right here on this chart all dancing around. You have bull zone, RDZ, bear zone, and all these lines would be moving around. It would be a little weird, right? And somebody would come in and say, I don't understand that. That's weird. Yeah, as Kevin has said, when price hits hedge pressure, forget level 2, which is kind of cool. Like if you have something, because I'm going to say level 2 is not completely useless. I'm not going to lie. We use it on the back end for certain things. Can't tell you what, but you need to utilize. I don't use it for trading or starting my trades at all, but we extract useful information from it as well. You just have to have a game plan. You're trying to look for a certain thing. You need the processing power algorithm to find it. Exactly. Yeah, I gotta see what's going on with my monitors, flickering and being weird. So we actually have meetings about this. Like, what's the probability that the majority of the group will watch this video? We're constantly trying to change our content so that the most amount of people get the most amount of information the quickest way possible. And so learning curve is an important thing. If you're a beginner, just like to see if what you're trading is making higher highs and higher lows and leg into the lows, or at least a test of the highs. Jay's nailing it. Those are great strategies. They're not terrible strategies. Static charge at a connection point, Kevin has said. I love you, man. You're probably right. The problem is that you have this massive multi-radiator cooling loop in there with hard tubing. It's getting hard to reseat anything without taking it all apart. Now the RAM I can take out and reseat, which is probably what I do. Video cards, I don't know if I can even get those out if I tried. Yeah, cables would be the first step. Yep, you're right. I'll undo all the PSU. Yeah, good part. I'll start with components. I'll do the RAM first. That is correct, because whenever you have a lot of plastic tubing, you can build up static. And plastic is a repository for static buildup. Reseating all the plugs. Yeah, good point. All PCI cards. Because I have the hardest part about those cards is that it took me a day to figure out how to even get them in, because the loop. That's why I love and hate about custom cooling loops. Sometimes you have to just barely work it in to get it in, and then you're basically stuck with everything. And these, I have two NVIDIA cards that are both in kind of this parallel path for the water cooling, and so they're both seated really quickly, and I had to turn the thing sideways and lean it a certain way and then press it in. I mean, it was really tough, and to get the tubing exactly lined up for it was one of the toughest things I've ever done building. So I'm well, I'm never taking this apart. But I did it for fun. So I don't know if I'm ever gonna go ham again on looping. The thing is, I have to have 2 video cards for all of my monitors, which kind of sucks. But I'm gonna do something different with my next build. I'm gonna try to do them they don't have typically vertical stands for 2 cards, just 1. I'd like to see them vertically and then mount them really far away so that I can actually take them out and just lift them straight up. It's hard to lift them out because they're still horizontal mounted. Yeah. Yeah, that's smart, Kev. All right, you guys. Markets ran and doing random stuff. Broken a bull zone. Nothing really to take from here. I'm probably going to call it a day. Easy peasy. Yeah, video watching time. That's right. So from here, there's really nothing else to say. I wouldn't be doing anything personally from here. Just kind of let it do its thing. Right, market pressing, testing high, CD band tapped. I already have the yellow light here. No trade day. Resiliences are good. We're supporting on the box. Here, that looks great. This is a support for there. DD still really strong. Bull zone support. So another thing is that the DD roll, right? Here. Now again, we still say coin flip, but the DD roll tends to support it bull zone, just like you did here. If I were short, I would exit there. I wouldn't long off of there because it'd be towards the end of the day. It's random what happens. So like if you were like, I'm going to short here, where do I short to? You know, bull zone is typically you're out or a pullback trade like that. Neuralink, no thoughts on that. Can we get bracket orders one day? We probably could. I'm just letting you know, the platform where we are now is fixed. We're not doing any changes in the platform until the marketplace stuff comes out. So your wish list items, keep them coming. We're going to go through a hiring spree at the beginning of the year. Leading up to the beginning of the year, where we're going to hire like 6 to 8 more developers. And from there, we're going to have them working on all kind of different stuff. We're going to have a dedicated team continuing to push features on the base platform. For now, though, what we have is frozen. So we're not adding any more features just yet. So all the automations we want to do, just because like our team is limited size. Oh, there's some randomness here. See, when I tell you the market's random at this point, it's gonna you gotta trust me. To trickle along, blip, little dip. That's what I'm saying. See, this is why I'll jump in and chase along. There's DD band resistance. What do you do from here? Hey, take a guess. You want me to prove that it's random? Take a guess. What would you do from here? You tell me. Right. See how cool it is, right? See, I told you, market's gonna do random stuff. It's not tradable. And so imagine how you chased along. Had I chased a short, whatever, I wouldn't have any indications of sell-off either. But this is what you get. Look, hedge pressure on NASDAQ. So somebody asked today, would you trade off a hedge pressure if it came back? You can. You just have to know that, you need your reward, you need your risk. But see, the thing is you've already connected to DD band. So once you hit that first resistance, you're not trading to it anymore. That's the rule that we teach. So even if I were to long from here, I'm not longing to go. I don't play market seesaw. Like, I don't bet that we bounce between support and resistance like this. You never see markets do that, like, ever, right? So maybe you can return here and go higher. Maybe it can retrace and come lower. And that's why I tell, like, second bounces, is it worth taking? Well, yeah, it is. But the thing is that you don't know where you're going to go. So normally, if I were to bounce from here, I would take the safer bet and just retrace half of it. More than anything. Does that make sense? Somebody asked. So like this to DD, I'm not like, oh, that to DD again. Oh, that to DD again. Every time it falls, I tend to think it loses less power, right? My brain does, even though it's random, right? You don't really know. I would trade half of the distance and half of the distance. Like I would try to get little scalps along the way. Why? Well, because volatility is in decay. Volatility on the VIX. So if VIX is in decay, then the V's aren't going to get bigger. The V's are going to get smaller. Aha, look at that. You learned something today, right? So in volatility and decay mode, which is typically what you're seeing, right? In general, below triple B and trading lower, the volatility is more likely to compress the price than it is expand and become wilder. So I don't bet on like the second play ever going bigger unless the market's more volatile. And we're in a non-volatile environment. Pretty cool, right? So that's the answer to that question somebody asked. Would you long on hedge pressure again? Yeah, I would, but I would be more conservative on the run. Like I would take smaller bets. I wouldn't bet on something like that ever. But the answer is, do I think it's wise to trade here? Absolutely not. This is exactly open mean reversion, markets and random. What do you do? Just sit out. And that's the smartest thing, right, when it comes to trading. Like, okay, maybe you missed out on, 10, 15, 20 points. But in reality, another trading day is another trading. Not every day is going to be actually nice. Here we see how we have Thanksgiving week. It's going to be Thanksgiving and Black Friday. It's going to be a lighter, less volume, kind of chill week. Am I gonna trade on Thanksgiving? Oh no. Neither should you guys. Y'all should go. You should take the day and then, like, be with family and stuff. It should. Thanksgiving's not the time to ruin your morning with a coin flip and then be all butthurt when you should be chilling with family. You should always have, like, your holidays free from the stock market. It's a general rule of life. Never want to be sitting there around the Christmas tree because the day before Christmas, on Christmas Eve or whatever, you blow up your trading account. What a way to ruin Christmas, right? At least wait till after. Is the Thanksgiving a market holiday? Well, right, but for futures. Futures still trade, I think, half day. Like, futures markets are global, right? And Thanksgiving's a U.S. holiday, so typically you have to look at the future schedule. I always forget every year which days are closed days or half days, but usually certain days futures will trade until noon, usually, and they'll halt, and then the day will pick back up at 6 p.m. Eastern, and then continue. So I'm not sure if Thanksgiving is also a futures holiday. I think Christmas is a day where it's shut down the whole time. But the stock market being closed, the futures market's likely a half day. Let me look at it real quick. I always forget. So equities products close normally on Wednesday. They open at noon. Sorry, they open at noon. Pre-open, open, 5. So it looks like hold on. Close, pre-open, open. And then Friday, looks like equities products are closed at 12:15 Friday. So Thanksgiving, you're open at night like normally, like every other day. So Thursday until Friday trades a half day. So it looks like all day Thursday, the futures are also closed during the day, I'd presume. Wait, pre-open, open. Maybe no, I'm sorry. Looks like they go half day. This is weird how they're showing this. Hold on. And every exchange is different. They all have different. You have to find out what it is you want to trade. It's like on Thanksgiving Day, like certain things are open. Crude oil stops at noon 30. Grain oilseed closes at noon. So they're all different, right? Depending on each exchange is slightly different. Yeah. That's the Globex trading hours. Yeah, so I think that's what this is. Like this is just, see, we're open Wednesday night. So globally, we're open Wednesday night, and it looks like it's going to enter the halt state at noon on Thursday. It's considered Friday. That's where. Okay, so let's talk about this. Okay, So the trade date, Wednesday, Thursday, and Friday are all considered Friday's candle. See how they're all trade date Friday? So here's how this works. Wednesday night at 6, this is right, that's why I was saying earlier. So at 5 o'clock Central, market opens on Wednesday. So here's Wednesday, 6 o'clock Eastern, 5 Central, futures market opens in equities right here. Sorry, here. So Wednesday night, trading is going to happen. That Wednesday night day is actually Friday's candle. Okay, this is considered Friday's trading day that starts on Wednesday. This is how this works. You go to a daily chart, you will see Monday, Tuesday, Wednesday, and then Friday's candle. And Friday's candle will be a composite of Wednesday, Thursday, and Friday's trading. So 5 o'clock we open. Thursday at noon, halt. At 5 o'clock again, Thursday night. So 12 to 5, there's nothing. We open a second time, and then we trade, and then Friday happens. And it looks like Friday's closed at half day. Closed. So technically, you can trade Thanksgiving morning, as Ann has said. So futures market is open half day. So technically half day on Thursday. So overnight Wednesday, half day Thursday, halt till 5, Thursday night, 5 until noon o'clock Sunday or Friday. And this is all considered Friday. Does that make sense, everybody? That's how you read this. So yes, Thanksgiving will be open for half a day, as you see right here. They used to say halt, now they just say pre-open. That made it confusing, but pre-open is when the IOP is done as well. Questions, anybody? This is just futures, and you have to be careful because every single futures exchange, they're all different. Look, energy closes an hour and a half later, right? And grains, they're not open at all, or they're not closing or pre-opening anything. Like they're all different, so you have to know what it is you're trading. Those of you trading like equities futures, then this is your look at it. So we got it. As Anna said, correct. Futures market is open a half day on Thursday for Friday's trading day. Well, technically a half morning. So the U.S. session halfway through, close at noon. But then Thursday night, you're back to open like normal. And if you're like, maybe I should trade Thanksgiving or figure out what I should do. In reality, there's no rhyme or reason. I've never seen Thanksgiving days do anything predictable. I've seen them sometimes just go nowhere. I've seen them sometimes continue a short squeeze and rally really hard, 20, 30 points in the overnight. It's kind of difficult. Anybody ever trade pork bellies or orange juice or coffee? Good question. I never have. I wonder if anyone here has. Why is there a section in Discord for conversions? Well, it's kind of like a... Before the platform was out, we had a conversion team because the old app that we used to have that wasn't a platform would just give hedge pressures and just print them out, and then people would convert them at 9:30 for futures because they're estimates. Now again, the dancing around is not a lot. I mean, it's like, imagine my mouse right here. Imagine hedge pressure just doing this, right? It's a percent off, if anything. It's the magnitude of error is a couple percent. Like the fraction could be point, you know, like 1.01, 1.03, 0.97, 0.98. So you're going up and down like a couple of percent. It just looks like this. So what they do is they usually anchor the conversion at 9:30 so that you have an anchor point, just because it was something we did back in the day for each other. Like people would always ask and they would always reference different things, and the concept wasn't really well absorbed by everybody, that they just dance around in real time. So we created a standard, which was like, okay, in the meantime, before we get the platform, let's just convert it at 9:30, and everybody has the same reference point, because people would like quote hedge pressures. They were always different because they were converting them at random times. So that spawned that little smaller community, and then it just became like a thing that they do. Everyone gets together and still does it, just because that's just like a group that does it and they love doing it. I wouldn't say it changed that drastically. But it's a reference point as a quickie estimate for somebody to know like about where it is at 9:30 in the morning relative. So people make their opening decision off of that 9:30 print, and then maybe not everybody has the chart to look at because they're at work or something. But it was great. Like I said, it's great as an estimate, and the conversions will be off by a couple percent, right, as the day changes. And it's just the random noise of the way the S&P and the futures are not just stacked tick for tick on top of each other, right? And at D, you're correct. It's just a reference point. So like now the community is great, and they do helpful work for everyone else. It's you don't need to pay attention to it if you're actually trading on the chart, and you understand that the most appropriate way to do it is have them side by side like I do, and then just watch one and trade the other, because that's the most accurate way. You'll get both of them still and static. As you see, there's no lines dancing when you do it this way. And if we were to make a combined chart, the trick, and this is the solution I came up with, is that imagine hedge pressure is here. And if it updates every single tick, then hedge pressure is going to like dance around just like this is dancing around. Like, you know, it's going to just move around. So what I designed was an idea that how far away you are from a line dictates how the frequency in which it updates. An example is if this calculation updated every single tick, then it would be dancing all the time. But in reality, you don't care what its exact value is until you're actually close to it, right? And it's actionable. So the idea is imagine like there's a threshold, and I'm just going to draw some things right here. Imagine if hedge pressure was here, it would update every second. If hedge pressure was here, it'd update every 10 seconds. If hedge pressure was here, it'd update every 100 seconds, or something like a logarithmic scale. The further away you are, like if you're up here, this only updated once every minute and a half or something, right? So it wouldn't be dancing around because it's far enough away you don't care. It's at its reference point. And then every so often it'll move. But it's not flickering and all the time and making the chart noisy. So imagine like right now, DD bands are converting to like DD bands are really far away. They're updating once a minute or something. But now that we're approaching DD bands, now the DD bands are starting to move, or because they're updating every second or every tick. You know, as price is moving, you want to see where that moving target is. So then it starts to have that granularity where everything else would be still. Pretty cool, right? That's like the best solution for that. It only moves when you're close to it. As mean we only allow the calculation to update as a percent. We use like a logarithmic scale. Like the closer, if you're going straight towards it, it'll like update. So I'm drawing like a logarithmic axis on the X right here. Oops. Let me show you what I mean. If every dot is how often it updates, and this is price. If price were to move straight up towards a level, here would be an update. Here would be an update. So price follow. This is what price is doing from here to here. Update. So as you get closer, it's just updating more frequent. Does that make sense? So as you're getting close to it, then it starts dancing around. If you're far away, it's like very rarely moving at all. So the idea is the polling interval in the calculation logarithmically changes as a function of how far away price is from it. Like if you're right at it, then it's dancing around. If you're far enough away from it, it's just moving maybe every 5 seconds. So that's how we're going to do our combined charts when we do them. But even so, to avoid it completely, you just stare at one, trade the other. All right, guys, I'm going to call it a day. Love y'all. No trades today. Sitting out, just chilling, letting it happen. You know, market's always going to do this sometimes. Not every day's a trading day, and we love it. But, you know, it is what it is. Thanks for tuning in. We love you. Got a lot of work to do. We're here at Rock Scooter headquarters. You know, we got a bunch of big stuff coming out, so we're glad you're here to join us on this journey. Remember, we have our Black Friday deal going on. 60% off of yearly, which is really crazy. We never really got that low, but hey, check it out. And also 20% off a lifetime. It's always very popular. We do that once a year. For those of you that want to get in, never pay again, get all your updates for free, all that stuff, yada, yada. Check it out. Go to the Discord. Send us a message if you have any questions, and feel free to, you know, join a community. We have this also $35 a month for 3 months, extended trial for the $200 package. You can get everything that we have for $35. Make it really chill and cool. Go in and check out the videos and come to the Zoom calls and learn a little bit, and at least, you know, check out what our family's all about. We'd love to see you here. We'll see you all later.